Hi fellow traders, I'm making this video to share my GBP USD analysis and trading plan with you. Today after the release of US PCE, core PCE and yearly PCE, that is Y/Y year over year PCE, I have sold GBP USD, and the reason behind selling GBP USD is the previous sentiment coming from the Bank of England, which was weak enough to send GBP to a very low level, which was not seen since November 2023, and it looks like GBP USD is ready to continue to the downside because trend is clearly to the downside. And now if we look at the technical analysis, it was the previous retracement. The recent upward retracement is almost similar, slightly more than that, and the red line which you can see at 1.25388 is a resistance line because it used to be previous swing low, which was previous support, and now it has turned to be a resistance now. So technically it is resistance and market is in downtrend. And if we look at the PCE, year over year PCE came 0.2% better than forecast. There is no negative in PCE. Month over month PCE came 0.1% better, and month over month core PCE came month over month core PCE came same as the forecast. So if we look at the overall picture, it's not giving any relief. Inflation is sticky and it may delay the decision of rate cut. Moreover, there is already geopolitical tensions in the world because of Israel-Hamas war and Russia-Ukraine war, which already has made US dollar a pretty strong safe haven. In last couple of months, gold has been the best safe haven, but we are not trading gold here, we are trading forex, so I'm talking about forex here. So even though gold is the best safe haven nowadays, dollar still is the second best safe haven and is still way more powerful than pound and euro, and all of these things are together gonna send GBP USD to the downside. This is my view. So after talking about all my fundamental and technical view, now I'm gonna let you know where exactly I took my position. So you can see the dotted line. I have taken set 3 positions, something between 1.2530 and 1.2515, so 2515 and 2513. These are the areas between which I have taken the sell position, and definitely I took the sell position after looking at the PCE number after release, almost after 1 minute, and I was still looking. I divided my total risk into three different positions because I wanted to see how market react after the release for first 5 minutes. So I was looking at that, and then I gradually entered 3 different positions. Once I look that there was no revision in any PCE data, and market will definitely go down. However, there is nothing risk-free in the market, and any analysis can fail, which is why you will always need to be ready for your risk. So let me tell you my exit plan in case of loss. Let's say whatever I'm talking about, whatever analysis or observation I have done recently, let's say everything fails and market behaves in a very different manner, then what happens? I will have to book my loss. So I'm not going to place any stop loss because I don't want to get stopped out because of any spike. I have already considered something around 60 to 70 pips, that is 600 to 700 points to be my risk, and I believe that the market is not going to close away beyond that. So if we look at the recent top, it is something around 250, 300, that is 25 to 30 points above the current price. And even if market goes beyond today's high made so far, which is around 25.40, it will probably close around 25.50 or something. So I'm gonna wait for the closure of the daily candle, and if daily candle is gonna close at a bullish candle, it will totally invalidate the effect of PCE, and that's why I'll have to take the loss and close the position. So this is the scenario in case of loss. Now let's talk about where exactly I'm gonna set my take profit. So very first approach for setting the take profit is to have equal rewards. At least I'm going to take 60 pips in one position, that is 600 points, and I'm going to trail another position, and there is no fixed number which I can tell you right now by which I'm going to trail. So I'll need to look at how price develops to the downside. In case it actually goes to the downside, I'll have to look at the price behavior on 15 minutes and 5 minutes to find out the trailing stop. So here is what we need to do. For example, let's say market starts going down, and let's say market makes a swing like this, and it goes down, and again it goes slightly to the upside. So I'm gonna tell you how exactly I'll have to trail my stop if I'm going to trail my stop in second position, and then I'll tell you about the third position where I'm going to have a quite bigger target. So let's say it's going like this. So I'll have to look at the upward retracement in this case, and this is what I'm gonna see on 5 minute and 15 minute time frame. So I'm already on the 5 minute time frame right now. So let's say we see that the upward retracement is 71 points, that is 7.1 pips, and if you figure this out, sometimes you'll see maybe there is 20 points or 20 pips, 30 pips. It can be anything. It just I'm just giving you a hypothetical scenario. So I'll have to see how exactly price moves to the downside, and then I'll have to set my trailing stop to be slightly more than the biggest upward retracement in the downward movement. For example, let's say market moves to the downside like this, and let's say this retracement becomes slightly bigger, but if the fashion is downtrend, then every high should be lower than the previous high. There can be one or two exceptions though, and let's say there is such kind of upward retracement, then there is downward movement. So I have to look at all these upward retracement, like for example this is 8.2 pips, for example this is 7.3 pips, this is 10.2 pips, and this is 13 pips. In this case I'll have to keep my trailing stop more than 13 pips, 13, that is 130 point. So something around 160, that is 16 pips is what I'll keep my trailing stop in second position. So this is my plan in the second position. Now let's talk about what I'm going to do at the in third position. For third position I'm going to set the farthest target, which I'll definitely decide by looking at fundamental and technical factor both. So fundamental factors is all about what's gonna come tomorrow. For example, today after release of PCE we are going into weekend, and then we'll have to look at the Monday. So let's look at the Monday whether we have some significant data from US or UK or not. So there is no data on Monday, and there is no data from the UK. I'm talking about significant data. I'm not talking about the some other data which are like low impact news. I'm not talking about them. So we have employment cost index, which is very important data, because labor market condition is a crucial factor, and not only non-farm payroll but also GOLTS, job creation, and employment cost index are important data. So Tuesday will be very crucial, and I'll have to see whether the GBP USD continues to the downside or not, because for this to continue to the downside and to maintain the downtrend, the employment cost index must not come significantly less than expected. It should rather come same as expected. Up to 0.2 deviation will not make a huge difference, but if there will be a deviation of more than 0.2 to the negative side, let's say if it is expected something around 0.9, there is no expectation right now at any calendar, but previous employment cost index was 0.9, and let's say the expected one is 0.9, and then we get less than 0.7, then it will it will give upward move in GBP USD. So, and this is what I'm talking based on my experience looking at employment cost index. So if the deviation is less than 0.2, it will simply give slight upward retracement in GBP USD, even if it is negative. But if it is positive, it will rather accelerate the downside move. So if I am setting my target, the farthest target, I'll be very careful to prematurely close the trade at employment cost index at the release of employment cost index on Tuesday in case it comes significantly less than forecast. Otherwise, I'll simply maintain my position. So now let's go back to the daily time frame and figure out where exactly will be my farthest target for this trade. Alright, so let's try to understand the size of swings to the downside, because there are two ways to figure out the target. One is the extension, you can use Fibonacci extension. Another way is to look at the swing size. So if we look at the harmony, the very nearest target is 127% of this retracement, and it can be some sort of three drive. For example, this will be the first drive, this is second drive, and this can be third drive, which will give me a target of this point. But this is so far that it will take almost a week to reach here. So it is very important to look at all the data coming in between. So Tuesday will decide whether my trade can reach this area or not. Before this, what can be other things which I need to look, like AB equals CD extension or not. So let's draw Fibonacci extension 2, which will show AB equals CD. So AB equals CD is coming even farther. It's coming around 1.2137. Nearest one is the 61.8% extension of previous sharp move, which is coming around 1.2293. So these are going to, and this was also the previous swing low. So this 2295 or roughly 1.23 is going to act as the very next support, and there will be acceleration in the price, because we have half of the Friday today, we have Monday, and then we'll have half of the Tuesday, and these 3 days can already send price to 1.23. So that can be an exit point in case of premature exit, or else this will be the target 1.238, something around that, not exactly this. Alright, so that's all about my trade today, and I'm already floating with profit, because you can see that the price has moved down while I'm making this video. You can see that. So this is my live trading, and I'm going to post this video now. I don't know when exactly you are watching this, but yeah, I'm making this video right after I've taken trade. So 8:30 a.m. New York time was when the PCE was released, and I started making this video right after 8:35, because I was taking my position between 8:30 and 8:35. So that's all. Thank you for watching.